Welcome to the Retirement Architect with David Reyes. Our program is designed to not only provide insight, but to educate and give you the tools you need to design and build a rock-solid retirement.
And we are back with the financial architect himself, David Reyes, president, founder of Reyes Financial Architecture. Can be found online at reyesplan.com. David, welcome back in.
Thank you very much.
We want to talk today about the importance of working with a qualified, experienced financial professional. And I think, David, that there are different times and different reasons that people come to the realization that they may require the help and assistance of a planner advisor. Are you finding that there are a lot of people that sort of wait until a big event is right on their doorstep or has already happened that begin that process?
Yeah, you'd be amazed. I would say because our expertise lies in the retirement planning, retirement income planning specifically, arena, I would say half my clients that come to me are already retired, right? When I first started this business in 1995, my average age of my client was about 50. And the cool part about that was it was all pre-retirement plan. Not that I didn't have retirees, but it was probably 30% of people that are already retired and 70% that were doing retirement planning. And I think it's just the aging population. I think the average baby boomer now is over 65 now. I don't know the exact number, but they're approaching 70. I know that. And so I'm finding more people that are calling me or reaching out to us right before they're about to retire, literally months sometimes. And then probably just as many that are reaching out to me after they've retired. And, I always promote, obviously, doing it sooner than later for sure.
What is the reason or the idea, the thought that occurs that you think motivates people to finally reach out there on the doorstep of retirement or even already retired?
Yeah. I think, the number one fear clients have is running out of money. And so I think for some people that maybe don't reach out before and they retire and they start spending some of their money, they look at it as this pie that's just shrinking. And that's a scary, it's a scary thought. I tell clients all the time, part of my job is really just giving people permission, helping to give them permission to spend their own money. I found that out immediately when I first started this business, my first client. And that was really what came to my mind was like, wow, I really had to tell this person who had a lot of money, it's okay. So I always say we're kind of half camp counselor, half advisor. But I think the realization that especially our risk is if we live long enough, that's the problem. And so, the reality is how much can we spend? I've found mostly is that really clients have much more bandwidth from our perspective to spend more money, which is the fun part. The fun part is being able to people do the things they want to do they didn't think were possible. Whether it's traveling more, spending more time with the grandkids, giving more money away to charities, whatever that may be, that's the fun part, is being able to expand the opportunities that they have and the fun they can have in retirement. So it's kind of that band where we're gonna tell them what's possible, and usually what's possible is a lot more than what they thought.
Well, I know that it's never too late to get a plan put together, to at least formulate that plan, but also never too early. And I would wager that you would say it's easier to construct plans in advance. Do a lot of clients encourage maybe their children or younger relatives or siblings to come and talk to you?
All the time. It's more now, and I think it's part of my, I talked in our another segment about giving more, and part of me giving more to my clients is trying to help their children as much as I can. And my clients, I think it's because of my prodding and my openness with it. I had a client just the other day, David, you promised me that you didn't use that word. They were saying, hey, David, you'd mentioned that you would help our daughter and our son. And now I'm seeing both our daughter and their son separately. And that's one of many clients. And so the fact is that, yes, that is a bigger opportunity because they can learn not only from their parents, success, but their mistakes. And the fact that most people just are, the financial advisory industry, people not their fun. It's like going to the dentist, how fun is it? It's like being naked, right? Here's all my stuff. David, what do you think? It's like being judged. And so I try to make it as easy as possible. I'm a human being like everybody else, right? And I get it. And I just really always congratulate people for taking the step, whether we work together or not, you're here, right? At least you're going to get a second opinion on what you have or what you with another advisor, if you've never had an advisor. So just that part alone to me is very enjoyable. And I think that's what gives us any success we've had, is that I truly enjoy the process with the client. I always say everybody has a story. Once you understand their story, I can be their advisor potentially.
Well, I think that we are seeing that the younger generation is coming to the realization that they want some proactive planning. And even with all of the information in the universe at the palm of our hands these days, many times they don't know where to start. I also know that even proactive planners sometimes are not completely comfortable with where they stand and the results and how things are structured, specifically as we transition away from the paycheck and into retirement.
Yeah, it's just a different, as I talk about, your money has a job when we get involved, right? It's a different story than the pretty pie chart with the stock and bond allocations. What I'm asking the clients, how much can we spend from that money safely? And they're all worried about the same question. The problem is most firms and most of their experience, they're not being answered. That question is not being answered by their advisor. The answer they get is you're going to be okay. Now, I'm a math guy. Here, we want probabilities on our side. We want to be as sure as possible that we are going to have and hopefully exceed the expectations of our income in retirement. Again, we want the most amount of income, least amount of risk, and never run out of money. So when that's my job, and that's how we see their estate, their investments, their planning, it's a different perspective. And again, we're using everything under the sun, from, again, stocks to bonds to real estate to annuities, whatever is going to give them that safety and that income. And so, believe it or not, most firms don't have that periphery, or they're typically on one side or the other. They're going to be stocks are awesome, or they're going to say annuities are great. And I don't have a preference for either. I just want to have the most safest and successful retirement possible.
Do you find that the most frequent time that you are encountering savers and investors is when they want to answer that base question, how much do I need to retire? Can I retire? Do I have enough to retire confidently?
And that's exactly what you just said, is what every client asks me in one way, shape, or form or another. And so, yeah. And the fun part is when you've done it, one of our taglines is, you retire once, we retire every day. And one day laying in bed, I thought about that, is how do I concisely talk about a value proposition? So I'm going to have much more conviction about somebody's ability to retire than they are. And part of that's because I've had hundreds of clients retire over the years. And so I've been on the other side. Thank God, knock on wood, that we've never had a client have to retire. And I've had plenty of clients come to me, prospective clients, during 2008, during 2000, during the COVID crash, I call it, that had to either go back to work, stay at work longer, or sell assets. They had one prospective client that had to sell a $3 million property in San Francisco to stay retired, because he lost half his money during the COVID crash. He owned all the airlines, right, and all the cruise lines. He got hammered, and he was about 50% bonds too. Right. So you can imagine he was so aggressive in his stock portfolio that he lost about half his money, and he was going to be in danger of running out of money. So we don't want to even go there with clients. Right. And so I call that kind of Band-Aid a tourniquet. We have to help these people sometimes that are just misallocated or maybe spending too much based upon what they have, to help them to make sure that we can protect them. But thank God I've not had a client ever have to go back to work. And I don't plan on that happening ever.
I think that's another big concern on the minds of savers and investors and proactive planners, is that my plan simply is not complete, or I don't have the full information and education on several critical issues: the risks that we are taking, the fees that we are paying, how to maximize Social Security, how to minimize taxes. Those issues just have not been part of the status quo conversation during our accumulation years. Those are conversations you have each and every day.
Yeah. Well, think of what you're saying, how complicated that is. We were talking earlier, we got this thing called Google, right? And of course we can self-diagnose. We all do it, right? Of course, before I go to my doctor after and he says something, I'm looking it up, but somebody wiser than me once said, I don't know who said it, said, we're drowning in information and starving for wisdom. We're drowning in information and starving for wisdom. I have to check myself all the time. You got to immerse yourself and back yourself out, right? What's the most important things I can take away from learning? So a client, most people that have saved enough money are probably going to be okay. I found that over the years. But what we're going to do is help to optimize that, right? And the fact is, because it's complicated. You're dealing with taxes, Social Security, inflation now is a big problem. Stocks and bonds. There's all these different products out there. Again, annuities, real estate investments. I mean, it's just it's kind of that alphabet soup. And so what we really got to do is we do three things for every client. We do a risk assessment, we do a fee assessment, and we give everybody, regardless if they hire us or not, a full retirement income plan. I used to charge a lot of money to do this. What I found is it's easier for the client, and I enjoy doing it. Take them through the process, teach them all this stuff, because you have to teach them what they have first in order to educate them on what's possible. And that takes time. We'll spend an average of 3, 4, 5 meetings per client, per family. And that's just what's required to teach them what they have, teach them what's possible, and put a plan together. And so doing this for a long time, I just feel that's what's required to get, whether they hire us or not, to get them from where they're at today to where they need to be. And I always promise people, whether we're together or not, you're gonna know things that you had no idea were possible. That's for sure.
Well, David, with that risk assessment, fee assessment, and written retirement income plan in hand, we are probably a long way on the path of having a solid plan to provide for retirement confidence and enjoyment.
Yep, absolutely. And that's all I care about. It's about people. All I care about, can I take them, from a position of where they're insecure and a little bit nervous to where they're like, wow, it's going to be okay. And unless I can do that, I tell a client, then don't hire us. If we can have significant value, change the needle for you, I'm going to tell you, I'm going to say, look, do this or that. And that happens sometimes, very infrequently, but sometimes it is just a tweak here or there. For most people, that's not the case. But if that is, I'm not going to have somebody move all their money, do all this planning. And a lot of it we're doing complimentary anyway, because we're doing 80% of the work up front for them as part of our second opinion process, which again, I enjoy doing. So yes, it's just really the enjoyment is going from somebody being really nervous to being relaxed and happy. And that's what I get. That's my selfish enjoyment out of the process.
He is the financial architect, David Reyes, founder advisor at Reyes Financial Architecture, found online at reyesplan.com. That's REYES plan.com. You can reach them at 858-597-1966. That's 858-597-1966. Doors always open for new clients as well as referrals from existing clients. David, your favorite people.
Thank you very much. I appreciate the time.
Thank you for spending your time with us again this week. Get the most out of your retirement plan. Call 866-REYES-PLAN. That's 866-REYES-PLAN. 866-739-3775. Or visit reyesplan.com.
No information presented today should be acted upon without meeting with a qualified and licensed professional. Reyes Financial Architecture, Inc., RFA, is an SEC-registered investment advisory firm. Such registration does not imply a certain level of skill or training. For a copy of RFA's current form ADV-2A brochure that includes a description of services provided, fees charged, and other important information, call 858-597-1966 or go to adviserinfo.sec.gov. RFA also is a licensed insurance agency with the state of California. License number 0G66604. This show is provided for informational purposes only. Opinions expressed in the show reflect RFA views as of the date of the recording and are subject to change. Nothing should be construed as a comprehensive statement of the matters discussed, considered investment, financial, legal, or tax advice, or a recommendation to buy or sell any type of security, and no investment decision should be made based solely on any information provided. Any forward-looking statements or forecasts discussed are based on assumptions, and actual results can vary from any such statements. Some of the information provided has been obtained by third parties and believed to be reliable, but not guaranteed. Past performance is not an indication of future returns. With respect to any discussion about RFA investment strategies, there's no guarantee that they will be profitable or perform as described during the show. RFA or one or more of its employees may have a position in the securities discussed and may purchase or sell such securities from time to time. All investments in securities carry risk, including the risk of losing principal amount invested. Different types of investments involve varying degrees of risk. There can be no assurance that any specific investment or investment product will be profitable or suitable for a particular investor's financial situation or risk tolerance. Asset allocation and portfolio diversification cannot ensure or guarantee better performance and cannot eliminate the risk of investment losses. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing insurance company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Surrender charges apply to base contracts. Optional life income benefit riders are used to calculate lifetime income payments only and are not available for cash surrender or in a death benefit. Fees may apply. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. Rates and returns mentioned on this program are subject to change without notice.